Got the tweet out. I believe it is live. Let's see. Yeah. All right. What's up, guys? How's everybody's weekend going? You know what? Let me grab some water while we wait for people to come in real quick. Be right back. What's up, Josh? Hope your weekend's been good. It is officially May. Sell in May and go away. We'll see if I think the selling's been going on. Don't necessarily think it was May that started it. I hope everybody had a good March. I hope everybody had a good first quarter. And if not, you know, like, it's in the past, right? You put it behind you and we're ready to move on, start fresh. Gonna give it just a few more minutes, 2 more minutes. If you guys can go retweet the tweet I put out or make your own tweet, let as many people know as possible that we're rocking these things live. I think they're more valuable if you watch them live. You guys can interact, ask questions, maybe, you know, participate instead of just consume. I think that's the coolest thing about social media is just the ability to participate in the conversation. Now I think people are retweeting it. My phone's gonna blow up, so I'll throw my phone away. My neck has been bugging the hell out of me. What's up, Stone? Is this Kevin? Nice. What's up, Kevin? Hey, Max. Oh, I feel a sneezing fit coming on right before I start the stream. Oh, I hope I don't have to start having a sneezing fit. All right, guys, let's get this kicked off. It's what is today's date? The 1st? Yeah, it's May 1st, guys. We are officially in the second quarter of 2022. This is the Sunday Prep. I'm Ricky Analog with TrueTrader.net. Last week was the first week I didn't do the Sunday Prep in a long time because I was traveling. And in fact, I put up a short little video with a challenge to you guys to see if you could come up with your own trade ideas. And I needed 3 things from you. I needed an entry, a target, and a stop. And we were going to pick from those to see if any of them worked or whatever. And we were going to, it's a bit of a giveaway, right? So, had quite a few entries. Some people, you know, had great ideas but didn't have all 3 of those things we needed. And you know, so we got to stick by we got to keep it to the black and white rules of the giveaway. But two guys, there's Ken in Miami, or Kendall, and Josh Logan, both had some great ideas. Ken's either, the levels were a bit far away, didn't get there, or were busted trades. And Josh's trade was a Microsoft idea, and he was saying, Microsoft has earnings early next week, but if prior to that it were to pop into that 289 area, it would be a fade, and he had a legit stop and a legit target. And it was funny because it worked, but it worked after the earnings. So like he was calling for like Monday or Tuesday. I think it happened Wednesday or Thursday. The idea was spot on. And so like it was kind of a toss up. I was thinking, you know what? We're going to give the prize to Josh for the idea, but I think Ken in Miami deserves a runner up, or definitely some sort of prize for his efforts. So both you guys shoot a email to I think admin@TrueTrader.net, or maybe it's support at I'm sure High Trader will throw it in the chat, but whatever that is, hit them up and you guys can pick from the online store a shirt for Ken, and I think Josh has his choice of whatever he wants from the store. So let's get into the topic real quick, guys. The topic for me this week is a focus on why it is important for me to trade that opening 30 minutes of the morning from 9:30 till 10 a.m. And I probably am beginning to sound like I'm beating a dead horse, but I think it's extremely important to kind of discuss a few things. And one of them is like the actual reasoning behind why those 30 minutes are, for me, the most important time of the day, as well as some other things. So why the opening 30 minutes? Well, if you guys are part of TrueTrader, you already know this. If not, this may be a bit foreign sounding to you or whatever, but the way I trade is I'm looking for stocks that have liquidity and range and make emotional moves, whether it's a big spike or an opening flush into extremely important levels, whether it's on the daily chart or intraday or into like a moving average or some pivots. And I take the reversion of that trade. Now, the reason those trades appear so frequently and work so often in the opening 30 minutes is because it's called the price discovery phase of the market for the day. You have a lot of big funds that have what we call market on open orders, and market makers and ECNs, they have to match their order books as best they can. And so you'll have this unique dynamic at the open of the market that only occurs typically right at the open, and there's imbalances at the close as well, but I don't trade that. But what happens is you may have an imbalance of buy orders over sell orders, or vice versa, right? And so if the whole market on open is for maybe 1 million shares to be bought of XYZ, and only 5 million shares are being offered to be sold as a market on open order, then there's a discrepancy in the supply and demand. It's what we call an imbalance, and you get these big crazy moves. So not only right off the open do you get these imbalances, but you also have whatever overnight catalyst there may have been. You have this other dynamic at work, which is the auction of the market trying to establish what people think is fair value for that equity at that time. And it can take a bit of time before the market finds some equilibrium and finds where they are in agreement that fair value is here. So during the price discovery phase, we get really big moves, and there's does it work every time? No, but it works enough that we have a distinct edge to take those mean reversion trades that are caused by these imbalances in this price discovery phase. So if you track the data on this, if you literally look at these kinds of setups day in, day out, at the end of the day, you go back through all these setups, you really, really, really begin to notice that it's not even so much the opening 30 minutes. It's like the opening 10 to 15 minutes is where the money is at for this strategy. And that's what I trade. And I say I trade the first 30 minutes, but I know for certain that as soon as we get past the opening 15 minutes, my setups are really diminishing. And even if they're there, they're not going to be as A+ as they were in the first 5 to 10 minutes. Now, there are different nuances to these setups, and I discuss them all the time in the room with True Trader guys. So, if you don't understand these setups or understand what I'm talking about and how we trade these, check TrueTrader.net out. We have the 5-day trial for $30, guys. Literally a black and white system that is given to you. If you want to know how to trade it, it's not a secret, but you got to come check it out, and then you'll probably understand more about what I'm talking about. But once we get past that opening 30 minutes, the price action is not the same. And I know a lot of people will argue, well, screen time's so important. Yeah, well, if you want to trade the opening 30 minutes, guess what? You can't study the charts or the price action or stock behavior at noon or 1 p.m. because what you're studying is not representative or applicable to the opening 30 minutes. They're not the same. So screen time is important, but you need to do it focused and with purpose. And you have to understand that what you're studying needs to be what you plan on trading. And I'm not here to tell you guys you can't be a trend trader and wait for that 10 a.m., 10:30 time period when you finally start to see trends develop. If that's what you want to do, then by all means do that. But I began trading as a way to have personal freedom and to design a life that I want to live. And I can make more money by sitting at the desk longer, but the opportunity cost isn't worth it. And it's not a guaranteed thing either. If I'm up 2, 3, 4R in the first half hour, well, let's say I'm up 4R after 30 minutes of trading. Maybe I took 5, 6 trades, 4 worked, maybe 1 was a scratch and 1 didn't, whatever. Let's just say that's the scenario that unfolded in the first 30 minutes. And then I decide I'm going to sit there longer. Yes, I might end up, closing out the day at 6R, so I gained another 2R, but at what cost? Hours and hours and hours of sitting there, wasting what could have been my whole day, whether it is pursuing an outside passion, maybe doing charity work, maybe you just trade as a supplemental income and you need to have another job, or you find a job that you actually get fulfillment from and you want to go do that job. Well, you can, but not if you're sitting at your desk all day, right? Like, I personally like to go golf. I like to golf as much as I can. Now, there's another side to that coin. What if you don't make another 2R on top of your 4R? What if you give back 2R? You were up 4R, first 30 minutes, and then you sit there for another 4 or 5 hours, and maybe you give back 1R. So you were at 4R, you give up an R, you're at 3R for the day, and what happens? You get upset because now you've given back some. Now you're a bit on tilt. Now you're going to take a trade to try to make back that money you gave back, or somehow justify that you sat there longer. And oftentimes what happens is you turn what should have been a nice easy green day into a red day, and that's completely unacceptable. Does it happen? Yes, but you shouldn't be okay with it. You need to be like, you got to treat this as a business, guys. And you can't just be sloppy. And if you do this for a hobby, good luck, because you got to take this dead serious. And I'm telling you right now, being serious about it, part of that is identifying when to be trading and when to be not in the market. And for me personally, that first 30 minutes gives me the ability to make a handsome living and have the whole day to enjoy my life. And that to me is like that perfect balance, living in harmony, right? If I had to sit at my desk for 7-8 hours in hopes of possibly making a little more than what I currently make, you wouldn't be able to convince me to do it, guys. So that's all I wanted to talk about real quick, was why you guys hear me talk about this all the time. There is actual reasoning behind it. There's data behind it. Whether it's tracking the setup to see does that setup work outside of that time period, or just looking at your personal performance using whatever software you use, whether you track your trading on an Excel sheet or you use something like EdgeWonk or TraderView or TradeMetria or whatever. Those things will also tell you, like, hey, asshole, look, you always lose money like between 10:30 and 11:30. What is that telling you? It's slapping your hand off the keyboard and telling you stop trading at that time of day. But for whatever reason, I can put up a few guesses what it is like some people are, you know, addicted to gambling or that thrill. They just need to have some skin in the game, and you know, that's, if you come to the market for that, you can go find that, you can get that itch scratched for a lot cheaper outside of the market, guys. You're a thrill seeker, go jump out of an airplane. You need to gamble on something just because you like to gamble. You can go find ways to do that, whether it's at a casino or just, you know, playing online poker or something, but not in the markets, guys. Not in the markets. Treat it like a business. Personally, my business plan says I trade the opening 30 minutes. I know, like, I can make an elevator pitch and tell you guys in 15 seconds what it is I do. Can you do that? All right, guys. Neither I, True Trader, or any of its affiliates are registered as security broker dealers. I'm not an investment advisor. Anything you hear me talk about is for entertainment purposes only. This is not a solicitation to buy or sell any stocks. So, guys, the ES. Here's your monthly chart. Remember, we get a new monthly candle starting tomorrow morning. We're in May now, and we are flirting with the first possible lower high followed by a lower low on the monthly time frame since 2015. If you look at these charts, never have we gotten a lower high followed by a lower low since way back right here. Now, one thing that, you know, if you're just looking at this chart, one of the things that stands out is that if you go and look at other bear markets, like here's your 2000 .com bubble, and here is your the great financial crisis. This price action seems a lot more volatile, right? Really wide monthly candles, nonstop. But I want to remind people that when you get into these big numbers like this, you know, these things happen down at the 1600, 1500 price range. We're up at the 4600s. If you look at it in a log chart, this kind of like adjust things for the price levels to show you a better, almost a more representative visual of like the size of the move we've seen. So when you do it this way, you can see, like, you know, even though it may feel like we've been in this bear market for a while, or we're way off the highs. Dude, we're down like 13% or some shit, right, from the highs. Let's go look. 15, 14%, somewhere in there. You know, if you look at past ones, this was down like 57%. This was down like 50%, I think. Let's check. 51%, right? So, like, you know, I know it seems like this is pretty ugly, but it can get a lot uglier, okay? And it doesn't mean it will, but I just want to keep people's expectations kind of in check or in line. Now, I do kind of think that we possibly break these February lows and do get the confirmation that we have a lower low after a lower high, right? Which, that's how things can trend down. Until we do that, right? If you guys remember, on the weekly time frame, we had triggered the long, and so that long trigger that we were talking about, which was the break right here in mid-March, that is not invalidated until we lose these lows, right? Because how's the thesis work? The thesis works like a stock, if it is going to go higher, needs to stop making lower highs and lower lows. The only way to do that is to make a higher low and then a higher high. We did that. Now, we don't know where the next low is going to be. Is it going to be a higher low, or is it going to be a lower low? So until we come back under February's lows, this is still technically intact. Now, granted, it's pretty damn ugly, right? It's just been red week after the big bear market rally up into those levels. But just as black and white as we can keep it, as objective as we can keep it, this is still intact until we lose February's lows. I think we do lose them, but I also have to keep things objective in terms of how I can trade. We're getting to the point where even if we do lose those lows, we're getting a bit oversold just on the near term chart. Like if we look into a daily here, you'll see it's just been down. A few little rallies, but they got smoked pretty quickly. And even if we lose these lows, I really do think that we attempt to go higher first before rolling over significantly more. And remember, that's normal. We absolutely need to try to go higher first in order in order to substantially go lower. So, you know, if we were to just keep falling off a map, eventually we're going to get a big face ripper, and that's not going to be, you know, as easy to trade as if this is to stay a little more controlled and we get that attempt to go higher, we see the bulls fail, and then the bears step back in. So you can see the levels I have marked. I do want to point one thing out, and this applies to both the Nasdaq and the S&P, and that is last Monday, which is this green candle right here. I was actually traveling home that day, right? So I wasn't in the market that day, but I had gotten home that night, and the next morning, you know, I'm trading at my desk for the first time in like over a week. So I'm checking out the market, and I look at the daily candle on the ES and the NQ, and I'll show you the NQ too real quick so you can see it. It was this one, right? This candle. Both of them were pretty bullish candles after a decent sell-off. Those are pretty bullish reversal candles on the daily chart, you know. And I came into the market saying, you know, I think the plan for today is look for flushes to support to get long on some certain equities or whatever. And dude, they just got all the bulls got destroyed this day. They just could not bounce. And then you get 2 days of attempted to rally and then new lows again. So like I really do feel like this is showing that the bears are starting to get a bit more confident and the rallies aren't really worrying them at all. I do think we come under February's lows and then maybe try to push back up. You'll see the resistance I have marked, 42.25 we'll call it, is going to put us into an area where I'm looking for resistance. And above that we have last week's highs, this kind of area up in the 4,300 area. If we get through that, you got the 50-day and the 20-day in this range, which puts you into levels that are significant, even if there was no moving averages there, right? And that's one of those things I hope you guys understand is this confluence of, you know, if it's just a 20-day there, but there's no daily levels, there's no reason why that moving average really should matter. It's a little less amount of weight I'm about to or able to put into that level because it's just a moving average, right? But if there's levels like these daily levels, you see we're just kept hitting our heads up on that, right? Right after we had shown support there, come under, resistance, get above it, show support. Now we're below it and we're going to push right into it. Now the 50-day and the 20-day are both right there. That level is going to have a lot of significance for me, all right? And then above that, you got your quarterly pivot, which will change tomorrow, guys, right? Let's see. Oh, no. The new quarterly started in April. I'm sorry. But you have the 200-day and the weekly 20 is up there as well. We'll call it 44.70. Support, all we have is the rut row level, which is February's lows. Below that, you have your annual pivot and that round psychological level of 4K. Okay. So NQ is going to be very similar, except the fact that we already broke those lows last week on NQ, right? The same lows that we were just talking about on the ES. Those things were broke last week on this. And I mean, this is just, I mean, we've been talking about it for a long time. I don't want to keep reiterating it, but it's just like, at what point were all the signs there where we were like, dude, we should not really be looking to buy the dip anymore, right? Like, this price action this whole way up is, here's what you do. This is how you remind people. Look at guys. Oh, they flipped it back again. Hold on. Look at this extremely bullish chart. That's what I do, okay? This looks like some downtrend that just ended, and we are starting to see a really bullish looking chart. Well, of course, all I did was flipped it upside down. So, again, the rut row level is going to be last week's lows. It's not as significant as the previous one, which was, you know, after making the bull attempt where we broke, if you guys remember, February 2nd, right, was this high right here. We breached that by not a lot on the NQ, but we did. So technically, this was a new high compared to this pivot high, okay? So you got a long trigger there, but it just immediately stuffed lower high and then has been lower high, lower low since. And so now you had a long bias trigger that failed, and now we've triggered the short trigger. So, you know, I'm not really interested, and I actually talked about this last week. I don't want people, and again, not financial advice, but I don't want people initiating longer term long positions in this market. You're going to see a time, like if you guys go look at all the other bear markets, they have to bottom in the same way. The only way something can bottom is to first start making higher lows and higher highs, and then you should see a base form, some sort of, you know, sideways action, and then a healthy push out of that base. There's no rush. There's zero rush to get in here and be trying to find a bottom. We've talked about this. There was a lot of Twitter perma bears that called a top the whole way up for the last 13 years, and they all got, you know, laughed at, ran over, left in the dust. I don't know how any of them made money, but the same thing applies once we start this downtrend. Is don't be that guy that's calling the bottom the whole way down. There's zero reason to do it. Path of least resistance is lower. Short pops, ride the trend, let the trend pay you. Does that mean there's no long day trades? Hell no. I take day trades long all the time, but you got to know your levels. It's best to wait for some extensions to the downside when you see that capitulation, and then you're going to have a few days of these bear market rallies where, you know, the bulls just rip your face off, and if you can be prepared for those, you can capitalize on the long side big time. But it's not for longer term positions. So you guys can see the levels I have marked. I've got the quarterly pivot up there, right, 13,000 psychological level. It's going to be close to Thursday's low a day as well, and Wednesday's closing price. So and Tuesday's closing price as well. So there's a lot of price history there. You can see it was the lows back in mid-March. So a spike back up in those levels. That's the first level of resistance I have. Next, I've got this 13,200 area. And then after that, the annual pivot with last month's pivot right in that 13.4 area. Yes, there's levels higher. Not sure we see them this week or not, but let's just in case, we'll throw another alert up here around last week's highs. And if you guys don't know how I set these, this is what I do. Okay, so there's another one. When I mark it with an R, that just means resistance. Mark it with an S, it's support. All right, that's well, and then of course the support is last week's lows, and then the next level I have for support is going to be based off of the range that was set. You see the highs, and then held as support. It's going to be this 12,300 area, 12,300 to 12,500. Okay, so it's a range. If we lose last week's lows, that's the next area where I would see possible support. Doesn't mean they'll show up or not, but keep an eye on it. Bitcoin got a little bit jammed up the other day, right? It was it wasn't just Bitcoin, but it was a lot of the cryptocurrencies were all selling off. It doesn't even look like that crazy of a sell-off in hindsight, right? It was pretty damn controlled. It was just 2 days up, 2 days down. We'll get a bit of a bounce day here. But again, we're right into this little trend line here. We're also right into, if you guys see the levels from right in here, you had a lot of lows. Just draw it straight across, right? Not that one. That one too, but these ones. So will this hold? I don't know. Again, if it does and we start to make higher lows and then it looks like it wants to push, then I may look to get long on some of the equities that follow the cryptocurrencies like Riot, Coin, Mara. But at the moment, those names all look like shit, like dog shit. And I'm not touching them. In fact, like if you look at something like Coin, dude, it's a short on all pops until Bitcoin can turn itself around. It is looking a bit oversold to me or whatever, but it's still nothing about this makes me want to long it. Unless maybe we flush down to 100, which is that psychological level. I might try to bounce it off 100, but I mean, this chart looks like dog shit. I'm sorry to use that language, but if that's a gross chart. Yeah, so I'm not going to really spend a lot of time on Bitcoin. I think it's a key level. If it doesn't hold, I think we're coming down to the next areas, possibly 35K. We'll see. Let's get into the sector analysis. This one, obviously, everything was red last week. Few things had a little bit of strength or relative strength, right? Materials, doesn't matter. I don't really trade them. IT was surprisingly not as destroyed. Keep in mind, you had Apple, Amazon, you had a bunch of names report last week. Now, one thing I do find kind of funny is that consumer staples in the last month is the only thing that's green on the month over the last 30 days. Now, we all know energy and oil have been strong, but you see that they're actually a bit negative. All that means to me is that these things have pulled back or are pulling back, and they are still probably the only sectors that look like the bull market or the bull trend is still intact, along with consumer staples. So let's go look at the ETFs. I actually made notes on most of them, so we can just go straight through the notes. Whoops. All right, so XRT. This is what I've said about this. Look at this beautiful bullish chart about to break out. Whoops, it's inverted. Sorry, guys. Looks like it's about to fall off a cliff, okay? So retail, I'm not looking to get long any of the retail names. I guess you could make an argument that's a little oversold because we're kind of getting extended away from the 20-day. If we were to spike up into the 20-day, I'd be fading any equities that are retailers that are also spiking into levels of resistance. If we lose February's lows, watch out below, okay? XLF. This one I do actually think is a bit oversold and right into the monthly 20. So, you know, I would look to fade these names on bounces back into resistance. What did I write? Okay, and I did write that if it were to speed up more to the downside, I would actually be interested in some bounce plays on the individual names on XLF. XLV. Healthcare is, you know, it was looking good up until real recently, but this chart is flirting with some levels that if it doesn't hold, like if basically we come under this 125 area and lose it, it's gonna finally start looking like this chart's onto the backside. I know that this here is higher than this, but it is very double topish looking. You know, these are constantly making new highs, but when the pullbacks are this deep, it just shows me that the bulls really aren't in control as much as they'd like to be. I think under 125, you kind of got to watch out on this sector. XLU utilities. Utilities has a big pullback. It's right into this level of, this is like the recent breakout area, right? You can see the highs from back in 2020, and then the recent highs back in late 21. We broke above. This is kind of the first real retest of it, right? So very interested to see, does this level hold on the utilities? Again, we talk about this week after week. Utilities tend to be leaders in the later market cycles. XLP. This is one of the ones that we were just talking about. Bull trend still intact. Flushes down to 75-ish, you know, maybe even the 50-day. I might be looking to get long on consumer staple individual names. Consumer discretionary, absolutely getting destroyed. Makes total sense, right? If a recession's coming, inflation's through the roof, people can't afford things, they're not buying stuff that is, you know, materialistic or frivolous. They are saving their money, or they're just spending it on things that are necessities, right? XLC, communications, getting a bit extended. It's extremely weak, but it doesn't come as much as a surprise considering, one, they were the ones that kind of started this rollover. They were one of the first sectors to start unwinding. I may look, yeah, I did write down that if it flushes down, you know, into maybe the 55 area, I'd probably be a little interested for bounce plays, just like I was talking about with the financial sector. XBI, important level being tested here. You guys remember this chart? We're right down into this trend line. We're still unable to bounce. You know, it did start to look promising, but we got right into the weekly 20, and you know, it's pretty damn close to hitting it, right? And then rolled straight over. So the trend is still down, but I will be watching this level to see, do we start to base? You know, it's hard to ignore that the volume's been growing on it. We'll see if we get higher lows on a weekly time frame. So this isn't something like, I'm pretty sure next Sunday when we do the Sunday prep, I won't have much different to say about this unless we lose this trend line. Let's say we hold right here and start to bounce, whatever. On a weekly time frame, it's going to take a few weeks to see what I need to see before I would get interested. XLK, tech, getting smoked. Looks no different than the Nasdaq chart. Why should it? hanging on by a thread. I'm hoping we get what I refer to as one of those vicious bear market rallies for good short entries on tech names. And then XLE and XOP I just lumped together. The energy and the oil, they're quickly becoming like the only game in town for the bulls where they can possibly safely put their money to work on long ideas. You've got, over the weekend we had the Berkshire Halfway annual meeting, right, where Munger and Buffett talk, and they were talking about how they're still bullish on oil and they're buying more Chevron. They were buying, they bought a lot of Occidental, and we'll see if that causes any movement in those individual names on Monday, tomorrow. But when those guys are putting money into a market, it's because they think that market can continue for a lot longer. You have to understand the kind of money those guys are moving. You can't just be in and out of positions. Those are very, very large positions. And, they're not thinking that it's just going to go higher for a week, 2 weeks. Like, they have to understand that, if they're going to put that much money into something, they got to have some follow through to the upside. So we'll see. We've been monitoring oil and energy for quite a while now, and the bull trend is still intact. I do think if I were personally wanting to get long any oil or energy names, I'd like to see a pullback a bit deeper, right? I'd like to see the weekly 20 or the weekly 50, oil up into this 113, 112 area. What was XLE at? In XLE, yeah, somewhere in the 67 to 68 area, maybe even 69. You got your weekly 20, but the uptrends are intact. And if you compare those to all the other sectors other than consumer staples, not a lot of other stuff out there would deserve your money on long ideas. So that being said, that's all the sectors. Let's hop into the long ideas first. Remember, I split my ideas into two main sections, longs and shorts, and then each of those has two sections. So the first of the longs is strong stocks, where I'm looking for continuation. So let me switch to a daily chart. First idea I have is CF, and I'm looking for 92 to 93 on this. And let's see here. Basically these two lows right here, is this Tuesday and Wednesday? Yeah, Tuesday and Wednesday both had these lows at 93, and you also had a dip there on Monday. If 93 doesn't work, I have no problem at all stopping out and revisiting this thing, maybe 91, 92. Again, I don't think you got to find the bottom on it. I think you could just be patient for it to flush down to these and watch for some higher lows and something to risk against. Keep in mind, these guys report Wednesday after the bell. And I'm going to kind of try to move through these ideas a little bit quicker because I got a lot of them. There's a lot of ideas this week. So on the daily chart, you can clearly see that 92 level, right? Boom, boom, and then higher. One more flush down there. I think it's a good scoop, maybe 92. Next idea is AA. I'm looking for 62.50. Basically looking for Monday's lows. You got your quarterly pivot down there at 62.83. So any flush down there, I'm scooping. Hopefully you guys understand. We talked about this in the opening segment of the prep. I'm trading in the first 30 minutes. I want an emotional flush down to those levels, and I'm scooping it. I have stops in. I have targets. I'm nailing and bailing, and I'm going to hit some damn golf balls, guys. So, if this doesn't, let's say Monday morning, tomorrow morning, market opens, and this thing comes down to like 66, and then spends the next hour and a half dripping down to 62.50, and then bounces, or maybe goes lower, whatever. Don't DM me or hit me up and ask me if, Ricky, did you trade that? No, I didn't. It needs to happen in the opening 30 minutes, preferably the opening 10 minutes. Okay, that's the way I play these. Next idea is Twitter. And now I made a note, guys. Obviously, there's headline risk on this, okay? I like the chart. I'm thinking 44 to 45. If it can come down here again, I'm going to be a buyer, and I'm going to tell you this. I'm going to probably buy with leaving a piece of it for a swing, because I do feel like Elon gets this deal done, guys. I feel like he gets it done. I could be wrong, but keep in mind, it's just an arbitrage play, right? Special situation where, we already know the price that he offered was 54.20. You know, we come down to 45. You're looking at a pretty decent discount to what he was offering, and I feel like he's going to get this deal done. I could be wrong, but if I'm wrong, I would probably just cut it under, it's a swing, a small position with about 10 points of upside. I'd be willing to risk under 40. Okay, so if I can scoop 44s, I'll risk 4 points to make 11. That's on the swing. Now, if it's flushing down there, like in the opening 10, 15, 20 minutes in the morning, there'll be a bounce play as well. I'll scoop it and I'll sell the day trade portion of it on the bounce back into the levels I'm looking for, and I'll just leave that swing part on. Keep in mind the headline risk. Do not ignore that, okay, guys? But that works both ways too. It could just as easily be headline risk to the upside, where people think this deal is not going to happen, and then maybe he just tweets something. I don't know what it'd be, but like you could easily see this thing just rip. Okay, the next idea, APA 3950. 3950. I am looking for the 50-day on this one. Flush down, you got the monthly pivot, which was last month, right? You'll get a new monthly pivot this month, but it's also the lows from April 7th, right? And I mean, you can see this area was significant for a while, okay? So I would like to see the 50-day, a flush down into that 3950 area. I will scoop APA. These guys report Wednesday after the bell as well. So remember, this is just a Monday morning, or let's say it doesn't happen on tomorrow. Maybe we go a little bit higher. Maybe we have an inside day. Maybe we go sideways, and then it happens Tuesday. I'll take that trade Tuesday as well. But remember, they report Wednesday after the bell. Don't forget that. The next idea is IBM. I'm looking for 130.50. Now, I understand people might be confused how this ends up in strong stocks looking for continuation. I actually struggle with, do I put this in strong stocks looking for continuation, or does this go in like the oversold reversion setups? I don't really care what section you put it in. I like this level. I didn't want to not have this idea in here. 130.34 is the quarterly. 130.43 is the weekly 20. 130.58 is the annual. And you have these recent highs. I just want a little bit more capitulation down into those levels, and I'm going to try to bounce this one. IBM, 130.5. Next section, oversold reversion setups. GE, 70 is the first level that has my interest. You can see there's a gap to close down around 65. When you guys start to watch my Sunday preps, if you're new to this, understand one thing. The oversold reversion setups and the overbought reversion setups, it's very important to understand that those are the ones where you don't need to be guessing a top or bottom. If they're going to keep on flushing, let them keep on flushing. There's so much meat on the bone that we can be patient. We can wait for the author of the story, which is price, to tell us when it's time. We don't got to catch the knife. So I say 70, it has my interest. It does not mean I'm going to have a live order out there trying to buy this at 70. 65 would also have my interest. Again, I'm not going to just have it sitting out there trying to buy it. I've got to see something first in the chart. But GE does have my attention. CENX. CENX 15s. You got the annual pivot. We are really, really selling off. I feel like this one could go back to 20, 19 to 20. So I feel like there's a lot of upside on this. Again, not trying to catch a knife. Watch to see if it flushes into 15. Set your alerts. Let me just put an alert right now. Would you guys care? Oh, sorry, got rid of the volume there. All right, guys. Next one, Amazon. Now, Amazon, I will listen. I had to throw this in here because I'd be an idiot not to. I don't think it gets down there, but at 2,000. If Amazon goes to 2,000, I'm gonna do my duty and I'm gonna buy it. Okay. I most likely will express this trade with options, especially if it happens in some form of an emotional panic capitulation. But I think at 2,000, there's no way I can't, like, I could not turn my back on this trade. I would be there. Doesn't mean it'll work. I'm in this game to speculate. I will risk money when I think I have high probability or an edge. And I think Amazon selling off from 2,800 pre-earnings announcement straight down to 2K, there's an edge there. I wouldn't want to be somebody shorting it down there. And AFL is the last one in this section. AFL 53, what did I write? 54, 53, 50 to 54. You just see all these bottoms, right? If this capitulates down into those levels, same idea. Again, don't got to catch the falling knife. I'll be there though on AFL. Next section is shorts, right? So now, just like we were looking for strong stocks and I'm looking for them to continue, I'm looking for weak stocks and I'm looking for them to continue. And listen, guys, when I go into FinViz and run that screener, you guys have seen this one before, hopefully. It's the short pops back into the 20-day. Look at this. There's 237 charts to look at. That tells me a lot about the market, okay? I'm not going to go through them. I already have. But just throwing that out there. So Apple. If tech rolls over, I think this looks vulnerable. Why? Because we had this big push up into the underside of the 50-day and that nasty Friday candle, right? So I feel like under 155.50, this thing could come back down into 150. So if tech looks heavy, whatever, there's two ways I would look to play this. I would be looking to play this in let's look in the intraday chart for the levels. 162.50. You can see these. This is where it really tried to bounce and rolled back over. So here's the other thing. On these big tech names, with the market kind of selling off, if we gap up tomorrow, and Apple's opening around 162.50, that's obviously not my level anymore, okay? If we open flat or gap down 162.50, I'd short a spike emotionally up into that level, or possibly even wait for 163 area. But if we gap up, I'm just bumping those levels up to this 165 area, okay? If we open flat or gap down a little bit and we flush off the open, I'll probably just look to short the spike back into the previous day's lows, which would be 157.40 area. There's different ways these can unfold. I wish I could, get into more details. These always run like an hour and a half anyway, so I don't want them to go too long. But if you guys want to see how I trade these, truetrader.net, guys. I live stream in the morning. I'm on voice calling these trades out and chatting with guys all day long, talking about what did I see, what was my idea there, right? So if you guys don't understand these ideas, make sure you have a plan if you want to trade them. You can't just come into these Sunday preps and say Ricky says short XYZ at this price. That's we've talked about that. That's not how this works. There's a lot more to trading than just your entries. AMAT 116. I will short a spike into 116 Thursdays and Fridays highs, as well as last week there was a few days there, and the 20 days coming down into that level. Hard spike into 116. I'm going to be fading AMAT. Remember, opening 30 minutes, right? Again, also don't know where the market's opening tomorrow. We gap up, gap down. That will affect things, but we closed at 110, gapping up, spike into 116. I'm there. I made a note. If you don't like the $100 stocks, you can treat MU exactly the same. MU spike up into like 69 to 70. Actually, I wrote 70.5, so 70.50, which puts you right into these highs, which was where MU reversed from on Friday. Okay, so big spike in MU up into 70.5. That would be, you could trade the AMAT idea the same way on MU. Next idea, Intel. I guess I'm sorry, BDY, Best Buy is the next idea, I'm sorry. Alert set for both higher or lower. So you can see if we spike up into this 95 area, I want to be aware because I think the short's in the 96 to 96.5 area. And I also have trigger alerts set down here. If we come under 88.60s, I want to know because this thing could really start to unravel. Again, look at all the tech names, like the chips, the sectors, all these charts are looking really ugly. if the market starts rolling over and you have charts like Best Buy, and remember, Best Buy is a retailer. Remember what we said about XRT? Hanging on by a thread, guys, right? What happens if retail rolls over? Where do you think Best Buy is going? If we lose these levels, guys, and make sure you're checking out these higher time frame charts too. Look at this on a higher time frame. Okay, here's your highs, flush down. This is the first significant bounce. Now we've made 2 lower highs, lower high, lower high. We come under this. This Best Buy chart could get so ugly, guys. That's why it's on the list this week. Okay. Okay. Now the next one is Intel, INTC. Continuation short trigger was already done on Friday, right? So Friday, when it lost these lows, was a continuation short trigger. So it's already ready for me to short pops on it. So I'm thinking 45, spike into 45. If that doesn't work, I'd be looking for a spike into 48. Did I write? 48.50. Or what did I say? Hit pops this week could possibly swing. Oh, I put a note in here that I think this thing wants 38. So that's what the other note was. If you look at this is a long-term trend that, you know, we obviously lost this trend. We are losing some really key levels here. It does still need to lose this level. What is this one? It's 42.36. Under 42.36, I think we're coming down to 40 and 38. But I think it's already begun. I'm looking to short pops. Would love to see, like, even the weekly 20 is 48.70. So 48.50 would be amazing. I will give it a shot at 45 though if it spikes up there. LAC is the next one. Friday's high day is what I'm looking to short. You guys see the big spike into the annual and the quarterly pivot and straight back down. A spike back up into that level. I want to fade it. It also, you know, was unable to close above the 200-day. It's really showing a lot of weakness. Now the problem is it's holding these levels down here, right? So it to unravel more really does need to lose these 24s and 23s, but up into the 27 area, I'm definitely looking to fade. And the last idea is ROKU. Perpetual short, Friday's high day, monthly pivot. It was obviously last month, but you can see there was important levels there too. So any spike up into 100 and 101, I'm looking to fade ROKU. So that's it for the ideas. Like I said, I didn't want to spend too much time just on the ideas by themselves, but let me see if there were any questions we can go over. And so BPA, it says, what about Chinese names? I trade them a lot, and here's the thing: is like they have range, they have liquidity, they have headline risk, right? So I trade them almost every day when they meet my criteria, but none of them really end up on my scan because there's just no edge on the daily charts at the moment, right? Like you can make an argument that they look like they possibly are starting to try to bottom. And then again, like you could say that this whole way down, right? So BABA, for instance, BABA's going to need to make a higher low on the weekly chart and then come, if this wants to get my attention, BABA's got to get back over this level, 125-ish. And if it does it from here, then maybe we have a trend reversal. Maybe we can look to buy dips with like longer term views and stuff. But like this perpetual downtrend is pretty much just a short on all pops for me. But again, they don't end up on my Sunday prep because there's just not an edge in the chart. If I wake up tomorrow and they're gapping one way or another, they're almost certainly on my watch. But there's just nothing there that makes them deserving of being on the chart at the moment, or not on the chart, but on the scan. Javier says, thoughts on Duke long at 106.70. Let's look. Remember, Duke is a utility. So like, remember what utilities are doing. They just had this big pullback. So you would want to see utility start to hold, and then Duke possibly is a trade. Duke's one of the few utilities that has the range. It's got a $2 ATR, and it does trade enough liquidity. So personally, on Duke, I'd probably be looking 107.60s to 108. With you got the 50-day, you got these recent highs, and I mean we can just draw a line straight across, right? granted, those lines aren't written in stone. It's just more of an area. But this 107.80 to 108.50 area, that's what I'd be looking for on Duke. I personally don't like trading Duke that often. I really don't like trading any of the utilities that often. But I do see the level and I do see the trade there. He also was asking AEP long at 96.75. Yeah, I like that level. Let's see. It's got enough liquidity and range. I think I've talked about this one before. This is also another utility, right? So keep in mind, if one doesn't work, the other might. Like, here's the thing. You might want 96.70 on this one. You might want 106.70 on Duke. Maybe only this one gets the level you wanted. At least you had your eyes in multiple places. You can set alerts, and you could, if one doesn't get there, the other might. So, whoops. I don't know what I hit. Spacebar. Dan Kircher, IWM breaking support next level down 170, 175. Yeah, yeah, I'd say 170 more so than the 175, right? But yeah, definitely. And we were talking about this one before we ever. I don't know why. Maybe I had it on. Did I have it on here? Yeah. So I remember I had this box drawn, right? And I was like, we're gonna break one way or another. It was to the downside. Ever since we broke down, what have we done? Pushed into the underside of it, stuffed. Pushed into the underside of it, stuffed. And now we're heading lower, right? It doesn't look too good. That's for sure. Yeah, Tom was pointing out that Bob has just been following that weekly 20 down, right? And he's 100% right. Look at the weekly 20 and look at the way Baba interacts with it. So every time we push up into the weekly 20, heads lower. In order for this to end, we need to first get above that 125 level, and then we need to show that we can hold dips. Going through the chat real fast. Hold on, let me see if there's any more questions. Doesn't look like there's any more questions, but all right. Well, I don't know where does it show on the stream how long we've been. Okay, so dude, I kept it under an hour. I had like 15 or 16 ideas this week, and literally was like, dude, I'm probably gonna go like an hour and 45 minutes talking about this stuff. Maybe it's because I didn't stop to take drinks of water. Anyway, I'm back from vacation. I'm ready to rock. I had a great week last week. The markets are perfect for trading. It's not a swing market unless you can swing short. Make sure you're disciplined. Know when is the right time of day for you to trade. For me personally, it's the first 30 minutes, and then I have a tea time. Dude, stay disciplined, guys. All right. I love you guys. If you're in True Trader, I'll see you there in the morning. I'll have my game plan. I'll be on the squawk calling the trades as always. If you guys are not part of True Trader, at least do the $30 5-day trial. That is, I mean, if you can't spend $30 to invest in yourself, then good luck making it as a trader. Okay. If you're interested in the monthly plans, it's like $100 a month, guys. It's absolutely nothing. Especially for what you get. Don't take my word for it. Check us out. Give us a try. Stay safe. I'll see you guys in the market. Peace.